Thank you, Mr. Chair, Vice Chair, Ranking Member, members of the committee. In preparation for today's presentation, I did a lot of reading, and I went back and found a commission report that was done in 1993 post-Hurricane Andrew. And if you were to read the report today, it's as if you're reading today's news headlines. It talks about the same problems that our marketplace is currently experiencing, that we've been experiencing since 1993, and honestly prior to that. It's mass cancellations, non-renewals, insurance companies going insolvent, leaving the state, a lack of capacity, high cost of reinsurance. Those are the issues that plagued our system in 1993, and those are the issues that still plague our system today. We're seeing a lot of headlines out there that are talking about, there's light at the end of this tunnel. We've got 7 new insurance companies that have entered the state. But who have we allowed to enter the state? The same problems that plague us today, which are companies that came in, they're small domestic carriers, they're undercapitalized, they don't have the finances to cover these claims, and as a result, rely heavily on a reinsurance market. We know reinsurance costs are what drive premiums. They account for anywhere between 40 to 50% of what consumers are paying in their everyday insurance premium. So of the 7 new companies that have entered the state, all of them are also still currently being rated by a single ratings company, Demotech. All of them have received A ratings. But when you compare that to independent rating companies such as Weiss, an insurance company like Slide, who has received an A rating from Demotech, has a D plus from an independent rater. These are the problems that plagued our system in 1993. They plagued it in 2006, and they plague it today in 2023. So when we talk about whether or not the insurance industry is coming back because of the reforms that we've passed, sadly, the reality is all we're doing is creating the same mistakes. It's insanity to continue to do what we've done for the last 30 years over and over and over and expect a different outcome. We've heard multiple bills presented today where we've heard insurance company representatives basically threaten that if we ask them to stay on to protect consumers for 1 year after a catastrophic loss, that they're going to leave the state. Well, our plan works for one reason. There's one insurance company in the state of Florida that can never go insolvent, and that's Citizens. Citizens is created to be here for us in our time of greatest need. They can't leave our state. They're set to be here for us during that time. We went 12 years without a storm. As soon as we got a storm, insurance companies began to claim that they didn't have the funds to cover it. We know that the insolvencies that have plagued the state are a result of undercapitalization, poor management of funds, paying executives. By turning our dollars over to Citizens, those things are no longer existent. In good years, when we go 12 years without a storm, those dollars that we collect on premiums under our plan will go to a bank and sit and wait for that rainy day. We won't be worried about executives receiving payouts that we can't follow, that we can't track, that go into third parties. The biggest concern, though, when we talk about this type of plan is the assessments and the risk that we as Floridians bear. Well, we already bear that risk. We bear it when private companies go insolvent, and we bear it with the potential of Citizens. And when I think about hurricanes, as devastating as they can be, I often think about what happens after the storm.
Rep, you have 1 minute.
Thank you, sir. After a storm, usually your neighbors come together. You go outside when you don't have electricity. You share resources. You have those conversations. You meet with your neighbors, and you help each other out. Floridians go from coast to coast, bringing resources, bringing supplies. Neighbors helping neighbors. Floridians helping Floridians. That's what our plan does. This plan allows Florida and Floridians to take care of themselves. In the event of an assessment, which is always our biggest concern, whether we get them from FIGA when the private companies go under or we get it as a result of a Citizens assessment, I would rather know that I'm saving money on a premium with a Citizens policy like this, and if an assessment happens, my money is going to bail out my neighbor and not bail out an insurance company executive. Thank you.
Thank you. Excellent time management by you both. Yeah.